The background here is, as I'm sure pretty much everybody in this room knows, we are in the midst of a second trade dispute between the U.S. and China regarding solar modules. Solar World filed the first one in 2011, ultimately received tariffs to be imposed on Chinese modules entering the U.S., but didn't have a big impact on the market thus far, thanks to the scope of the petition, which only applied to cells, the location of cell manufacturing. And so most Chinese manufacturers have been able to get around that by doing cell manufacturing outside China, primarily in Taiwan, and with a relatively minimal cost impact still shipped to the US without having tariffs imposed. So Solar World filed a second petition, which is what we are in the middle of right now. And you know, we at GTM Research, we spend a ton of time on this case trying to understand it. And I'll just say from our perspective, it's super confusing. First of all, you know, even just understanding what the scope is in this case and how that might impact the market. Is there going to be another strategy like there has been in the last case that would apply this time? When is this going to play out? In what ways might it play out? And how might it impact the market? These are all questions that we have that we've been trying to answer ourselves and doing a pretty bad job of internally. And so we wanted to get some people up on a panel here who are knowledgeable in different ways about this case to help try to clarify it for us as well as all of you in the room at the same time. And we're very fortunate to have three fantastic panelists here to talk about it. Beginning to my immediate left is David Christy, who's senior counsel at Perkins Coie. Perkins represents, correct me if I'm wrong, Edison in this current case.
Edison and Gintech, the Taiwanese producer as
right.
well. By the way, it's Coie.
Oh, Coie, I'm sorry.
You know, it's written that way so that every time anybody pronounces it, I can then,
you can say
the lawyer
Coie.
can then say
right.
Coie, yeah.
Okay, so David Christy from Perkins Coie. John Gurley, who is a partner at Arent Fox, did I pronounce that one right?
Close enough.
Good. Who, correct me if I'm wrong, but represents Trina, just Trina or more
That's
than Trina?
correct.
Represents Trina in this particular case. And then Shyam Mehta, who you will hear from a lot more over the next couple of days, who is our lead upstream analyst at GTM Research. So before we begin, just a couple of things on what this panel is and what this panel isn't. You'll notice we do not have a representative from Solar World or one of Solar World's attorneys on the panel. It's not because we wouldn't be happy to have them, but it is because we don't want this panel to be a debate on the merits of the case. Whether this is a good idea to impose tariffs on China or not, that's not really a topic we want to cover here. What we want to cover is what the tariffs might be, what they might look like, what impact that might have on the market. So setting aside the question of whether this is a good thing or a bad thing, the question is what does it mean and how is it going to impact the market? So, and I've asked all the panelists to be as unbiased as possible, understanding that they come from, you know, a pretty specific perspective, and so I'm going to try to play off of that to the extent that I can. So the way that we're going to run the conversation here is we're going to kind of split it up into three segments. The first segment is just setting the stage by understanding the current status of this petition, the scope of this petition, and you know, how it's going to work out from a timeline perspective. So let's understand where we're at. Section 2 is going to be the current state of affairs with regard to module supply and demand and pricing in the US. So where do we stand right now? What are modules being priced at, and what does the market look like as a result? And then stage 3 is we're going to run through a few specific potential scenarios for what could happen with this trade case, and then speculate as to what that might mean for the market. So with no further ado, David and John, you guys are the ones who actually really know what's happening here. Maybe let's start with John. Could you, in a nutshell, explain to us this case, where it stands now, and the scope, and how it differs from the last time?
Okay, and I hope David pipes in. As a housekeeping matter, I'm speaking on behalf of myself here today and not as the lawyer for Trina Solar.
I sign on to that as well.
So the case has been filed, the petitions have been filed, and respondents, so these are the people of the foreign companies, have been selected in both the anti-dumping and the countervailing duty cases. The questionnaires, which is when they asked the Chinese, the Taiwanese to provide information, have been submitted, and they're going to be due in the next 2 or 3 weeks, depending on the company. So nothing is actually of real substance has been actually filed yet by the respondents. The first big deadline we have from a marketplace point of view, I think, is June 2nd, when the countervailing duty or subsidy preliminary determination will be made by the Department of Commerce.
So to clarify, what that means is that June 2nd is when we will see the first margins announced,
Yes.
the first numbers placed.
Preliminary margins.
And there will be preliminary margins, and they will just be the subsidy margins,
Yes.
which tend to be the lower number. So you'll see a number on June 2nd. That number doesn't reflect what the ultimate tariff might be. It could be a lot higher than that, but it gives you something to
Or it
start.
could be a lot lower than that.
Right. Or it
And
could be a lot lower.
applies only to the Chinese product.
And not the Taiwanese.
Not the Taiwanese.
Right, that's one point I should have made at the beginning, which is that this petition, in contrast to the first petition, which applied only to China, this one is China and Taiwan, intended to sort of get around this Taiwan cell manufacturing loophole.
And it's got, if I may, it's got an anti-dumping claim with regard to Taiwan and with regard to China, and then with regard to China, only the CVD claim, or
Subsidy.
only China for the CVD claim.
Right. So Shyam, actually, maybe you can start on this one, and then you guys can clarify. Scope. So what is the scope of this petition, and how does it differ from the first time?
He gets the fun one.
Yeah, this is the hardest question.
This
so
is
we'll
the
take a
key
minute with
to the
it.
case. Yeah.
Right. Well, so as I understand it, and please feel free to correct me, guys, the scope is still a subject of debate. It has not been finalized. The petition, as launched by SolarWorld at the beginning of this year, sought to include both Taiwanese cell manufacturing and Chinese module assembly, but then further extended it to what SolarWorld refers to as a 2 out of 3 ruling, where if 2 of the 3 components or value chain segments out of ingot wafer, cell, and module are conducted within a subject country, then that product would come under the scope of the new petition. So now, as I believe, the respondents, the Chinese and Taiwanese companies, have responded to that, put that under question, and there is being some back and forth currently ongoing on that.
I think it's fair to say, and if we remember going back to the original investigation, that also had a lot of fighting at the scope, which really wasn't sorted out toward the end. So what's happening now may not be sorted out for a while. To simplify it from the Chinese side, basically they're asking the Chinese companies to report, in the context of these trade cases, their sales of Chinese modules which incorporate Taiwanese cells, but which may have been made using Chinese wafers. And so this is the big fight in the case, is whether this is legally permissible to even have such a scope.
Right, so this is where it gets kind of complicated, at least from my perspective. Let's talk a little bit more broadly about this scope. So if SolarWorld gets the scope that it is asking for, that means, and correct me if I'm wrong here, that means that a Chinese manufacturer basically can make a wafer in China, but then would have to do both the cell and module manufacturing outside of China and outside of Taiwan in order to avoid tariffs. Is that correct?
I think the conventional wisdom is, certainly with the existing order, that the cell conversion is the most important part. So if a Chinese company sends wafers outside the United States and it's converted into a cell in country X and it's put in a module there, then it's outside this case. That's pretty clear.
I would put it differently in terms of what that scope determination would capture. And it would capture, let me back up for a second. So what happened after the first case, duties are imposed, Chinese manufacturers realize, well, cheaper to source cells from Taiwan, and then we'll ship it as non-subject, not subject to the duties, right? The petitioners come in and ask for a scope that would cover that, and not just cover that, but cover the next country that China would pick if the pipeline through Taiwan gets closed off, right? So Chinese wafers going to Malaysia and then coming back as cells to be put into modules in China. And so you have, that's really the power and the market of the scope request by the petitioners. And I think you mentioned that the Department of Commerce has never approved this type of scope before. So there's some question. You can make arguments on both sides that are fairly strong for why to adopt this scope or to adopt the scope in the earlier case where cell origin determines module origin. But operationally, it would put SolarWorld in a much more powerful position going forward if the department were to adopt their scope. And that gets to leverage in the negotiations and everything else.
Right, and so we'll come back to negotiations in a second. But so where we stand now is SolarWorld has proposed the scope and answered some questions about it. We are now waiting to see whether the Department of Commerce elects to adopt that scope or change it. When will we get an answer to that question?
In the original investigation, there was actually, they jumped the gun and actually told people what they thought they were going to do, which I think was a logical thing to do so that business people could have some certainty. In this case, I'm not so sure that's going to happen. We would just be speculating. It's possible that in the preliminary determination of the countervailing duty case, they will say, we have preliminary agreed that the scope is as follows, and they don't really make a judgment as to what they're going to do other than adopt the scope of what petitioners want. Or they could couch it in language to say, we're still looking at this issue and look forward to the legal briefs. We'll make a decision in the final determination. So the short answer is we might know on June 2nd, or they could kick the can down the road and leave us all guessing.
Right, so the uncertainty that we're facing now, which is a lot, could continue on for quite a while.
That's correct.
Yes.
My one other question on sort of where we stand today, so June 2nd we'll hear potentially the first preliminary CVD margins, but really the number, it seems to me that we should be waiting for with bated breath is the preliminary anti-dumping margins against China in particular, which could potentially be the largest number. When are we expecting that?
It's currently scheduled for June 11th, but everybody's assuming that it will be extended to, I think, around July 30th.
Right.
And probably the same thing would be for Taiwan as well.
Yeah.
Right.
So everybody in the case is assuming that the periods will be extended as far as they can be under the department's regulatory regime.
Right. Okay. So between now and the end of July, the things that basically could happen for everybody in the room are we will get a preliminary CVD determinations. We'll get some margins or not. We could get a scope ruling, but won't necessarily.
Or
Right.
even a scope shading.
Or a scope shading.
Yeah.
And we could or could not get a negotiated settlement, which we will come back to. Okay. I think that's good on the current state of affairs on the case, and then we'll come back to what might happen in a second. Shyam, let me turn to you. Talk to me about module pricing dynamics in the U.S. right now. How have they been trending so far this year? And given the uncertainty around this case, what does the future look like if you're trying to buy modules today?
Right. So I guess the first thing that should be said is that regardless of this new trade case, module pricing in the US for Chinese modules has been increasing over the last several months. And even if we didn't have, and that has nothing really to do with this trade case, the new trade case, and would probably continue to increase over the course of 2014. So just to throw some numbers out, around the second half of last year, you could get delivered pricing from a top-tier Chinese company in the mid to high 60 cents a watt. Even without any influence of this trade case, by our estimate, prices are already in the low to mid 70s, low 70s, and by the second half of 2014, they would be in the mid 70s by our estimate. And the driver for that is simply good old supply and demand. 2014, for the first time in a half decade in the industry, is when we've started to see some real supply constraints emerging across the PV value chain. Polysilicon pricing and wafer pricing especially, compared to the historic lows where prices were close to cash costs at the beginning of last year, things are starting to rebound. And that affects input prices of polysilicon. It also results in expansion of profit margins for suppliers who, for the last couple of years, have really been eking along, making a penny here or there. So even without any trade case influence, you'd have some effect on pricing. Again, mid 70s, right? Now when you're talking about that sort of pricing level, and you talk to the downstream companies in the US, most of them seem to be able to, that doesn't seem to cause them a lot of heartburn, a couple of cent increase. I think where things get more complicated now is where pricing goes from here onwards because of the trade case. And this has a bit of a long answer now, because what's really striking about the effect of the new case is in contrast to 2012, all of the Chinese companies had one single strategy. right, which is buy Taiwanese cells to get around the case. That has not been the case this time. In fact, the strategies have been evolving over time since the beginning of the year and vary tremendously from one Chinese company to another. So in the order of frequency, I've been talking to a lot of the Chinese companies that have been serving the US market the last couple of weeks. And the answers have been really across the board in terms of how they're planning to serve customers in the second half of the year. But I'm just trying to go in order of what I think is the most common strategy to the least common. So the first thing is if you try to buy modules from a Chinese company for delivery in the second half or anything after June, they'll probably tell you to wait until there's some more clarity, if you can. If you can't, the next most popular response will be to offer you pricing in the low to mid 70s, but not take any of that tariff risk. The buyer will have to take all of the tariff risk. So in effect, it's not fixed pricing. Okay? The third most popular option, and this is something I think I'm interested in hearing from you guys about how kosher this is that we've been hearing a couple of manufacturers contemplating shipping in all Chinese product into the US at a small markup to their US subsidiary, paying the existing tariff that applies to Chinese cell production, because under the existing tariff, that is still considered a Chinese module, and that amounts to around 35% tariff. And then selling at a price of about 80 cents a watt, which allows for a similar profit margin to what they've been making historically.
So let's pause there, because I do want to ask that question. So that's the idea there is a Chinese manufacturer shipping to their U.S. subsidiary at a very small margin, and in order to pay a smaller tariff under the existing imposed order. Is there anything that precludes somebody from doing that?
I'm going to be a very bad panelist here and pass on that question.
You want to be a good panelist?
I'll just say that no. But maybe I'll be I don't need to be a good one. I just need to be a slightly better
less
one.
bad.
I set the bar low. So.
I know. I would say that I would advise companies that are considering that course of action to consult with trade counsel before going forward.
I think that's your advice to everything.
No, it's not. But it is for that particular scheme.
Okay. So you've heard some companies contemplating that strategy, which would ultimately result in module pricing in the 80 cent a watt range for the second half of this year without any tariff risk.
Right. So the fixed price quotes that are currently being quoted by Chinese companies are, by my understanding, for the second half around the 80 cent a watt range, and that is the strategy that I just mentioned is what's driving that price. Another strategy is to avoid the tariffs altogether by using OEM suppliers outside Taiwan and China, right? So one possible example would be use a Chinese wafer, have that processed into a cell in South Korea, for example, have that cell then sent to, say, Poland, where we have one very large OEM manufacturer, assemble that into a module there, and then ship that to the US. So you've completely avoided any uncertainty risk associated with the tariff. And in fact, if you do the math on that, which we have, if you're one of the companies that has actually announced this course of action, you can make, again, a similar small profit margin in the US to what you were making before and ship in at a delivered price of about 76, 77 cents a watt. The problem with this strategy is that, so module assembly is not a big problem in terms of supply constraints. There's a lot out there, and it can be added very quickly. It's not capital intensive. It can be very manual intensive if you want to go that way. The problem is there's not a lot of, especially cost competitive, cell manufacturing capacity outside China and Taiwan. So the companies who take this route, there's only a couple of 100 megawatts that can be shipped into the US using this strategy. That still leaves a large hole. And just to throw some numbers out, last year, Chinese companies shipped about 3 gigawatts into the US. That's about 50 to 55% of total US shipments. That's a very large number, right? So following this strategy, given where existing cell manufacturing capacity is, still leaves a pretty large hole. So that's the fourth answer I was going to give. And the last answer, which applies to, I think, trusted, select key customers for some of the Chinese companies, is to partake in some kind of a risk-sharing agreement with respect to the tariff. Not significant exposure. We're talking about 3 cents a watt on both sides. And that is something I have heard Chinese suppliers mention as one way in which they're doing business with, again, very few select customers.
So, but this all comes back to, so these are all the options for if a customer goes to a supplier and says, I need modules delivered, I need pricing that is fixed of some kind for modules in the second half of this year. But most module manufacturers right now will tell you it's smarter to wait.
That's right. And I guess, after saying all of this, I think the main thing you need to take away is that the number one most popular answer was until after June is, we will sell you something in the mid-70s, low 70s, but you will have to take all of the risk associated with the tariff. And it does make sense from a Chinese supplier's perspective for at least some of the incumbents who've been in the US for a while, who have sort of limited share growth potential in the near term. The thing is, the US is not, given the way things currently are with the Taiwanese, with the existing tariff on Chinese cell manufacturing, it's not a great, very profitable market for a Chinese module supplier. You're barely making something between 10 to 14% gross margin because of the dynamics of the existing trade case. And with 2014 looking like a strong year for markets like Japan, especially, and then China, there's a lot of supply that can be allocated into those other markets. So effectively, a lot of these companies are comfortable, basically turning customers away, because a lot of the customers, some customers I have heard are willing to take that tariff risk, which surprises me, honestly. But by and large, most customers, when informed of the situation, just hit the pause button. And right now, that's the situation we're in, where there's a lot of uncertainty on both the customer side and the vendor side.
Great. Okay, so let's move on to what might happen here. So the four of us talked beforehand, and there are sort of limitless numbers of potential scenarios for what could come out of this case and when it could happen. So we narrowed it down to 3 scenarios that we think potentially are the most likely 3 scenarios, and that we can play out to their conclusion and speculate a little bit on how they might happen and what they might look like and what they might do to the market. So scenario number 1 is that the Department of Commerce adopts the petitioner's scope. So it agrees with SolarWorld that the scope as proposed by SolarWorld is fine. It's not inconsistent with the first ruling. They then impose, say, significant margins on everything. Significant margins on China for the combination of anti-dumping and countervailing duties, and smaller but still significant margins on Taiwan cells. So significant, let's say, China, same scale as last time around, so 30% plus, and Taiwan, 10% plus. So significant, not outlandish margins. So basically, SolarWorld gets what it's looking for, if not the magnitude of the tariffs, but at least the scope of the tariffs and that the tariffs do exist. So to the extent that you guys are willing, handicap the odds of this scenario playing out.
Well, first off, I will quibble with your original presentation. These are not the 3 most likely scenarios that we think happened. Frankly, the more you know, actually, I think the more you figure out that you don't know. And in the original investigation in 2011, not that many people predicted the day that petition was filed that this was going to wind up with the Chinese utilizing Taiwanese cells from day one. The impact on the market would have been muted. It took a while for this to sort of roll out. And right now, none of us, the main respondents, have filed substantive responses in this case to show what the anti-dumping or countervailing duties will be. So frankly, I don't know, and I'm in the thick of it. It's entirely unpredictable to a certain extent. So what you just pointed out is an option, but there are literally unlimited options. And I think we'll be a lot smarter probably in about 3 weeks after we see some of the responses come in. But
what will the responses tell you?
Well, the responses, what they require of the Chinese and the Taiwanese companies is the Chinese actually have to report, all their loans and all the various documents which would indicate whether they've received any subsidies. On the anti-dumping side, they have to report their selling prices in the U.S. market, and they have to report how much their theoretical cost of production is using cells and aluminum and glass and all of these different factors. Nobody has submitted those, and nobody has calculated what the value is going to be, since, as we all know, they don't look at the Chinese cost of production per se. They use this theoretical model, probably based upon what it would cost in Thailand to build a module.
And if I may, the data collection requirements are insane. So right now, our clients, and mine in Taiwan, John's in China, are scrambling to put all this together, because if they don't put it together, collect all the information that's requested, and do a good job doing it, the department can penalize them with higher margins. So there's a lot of work going on right now. As we're sitting here, we have teams that of lawyers that are doing this to make sure it all goes as smoothly as possible. But it's an incredible burden.
Right. Well, you guys get to sit in the lounge chairs.
Exactly. By the way, thank
And
you.
a pine.
Thank you for the lounge chairs.
Sure.
This is very nice.
So there are unlimited possible scenarios.
Yeah.
These are 3 of them. Maybe
Yeah.
they're not the most likely. Let's talk about this one anyway. So the solar world gets what it wants. There are significant tariffs imposed. Shyam, talk to me about what strategies, if any, the Chinese manufacturers might employ, and what this does to pricing.
So as I mentioned, if Solar World actually, if the 2 out of 3 ruling is what is final, that does create a bit of a problematic scenario in terms of supply availability from Chinese companies into the US. Because as I mentioned, I think the best option then is to use non-Chinese, non-Taiwanese cells, and then have them assembled into modules in, again, an offshore location.
And who can do that today?
When you're talking about cell companies, really the only meaningful amounts of cell capacity, and again, cost competitive cell capacity that exists outside of China and Taiwan are South Korea and India. And we're just talking about a little less than a gigawatt of that. And keep in mind, these guys are supplying other customers as well. So effectively, in terms of US available supply, it amounts to maybe a few hundred megawatts. So then you're really looking, at the possibility of the Chinese companies building offshore, overseas capacity outside China and Taiwan. And in fact, JA Solar just did mention a few days ago that that's something that they are mulling over, building an offshore facility for cell manufacturing, potentially in the US. But the thing is, that costs money. And even though we're in a much more balanced market and we're with supply constraints, spending lots of money on new manufacturing plants is probably not something that any manufacturer wants to get into at this stage.
What about the possibility that, let's just say there's significant supply constraints for Chinese manufacturers, and because they're sold out anyway, they don't need the US. Let's just say that by and large, Chinese manufacturers walk away from the US market absent their customers paying the tariffs and so high prices.
Right.
How much available supply is there out there that is cost competitive just from non-Chinese manufacturers?
Right. That is actually a great question. So here's the issue. The US is a bit of a unique market in that a large portion of demand for modules is not just cost sensitive, it's also bankability sensitive, for lack of a better word. Because I know this word bankability gets used and abused a lot. But I think all of us have a provisional understanding what it means. And it's a bit unique in this sense. So not only do people want modules for really cheap, they also want them from trusted, bankable vendors. So when you're looking at who can fill that gap that the Chinese could ostensibly leave, there's not a lot of companies that meet that requirement. So there are other low-cost vendors from India, increasingly in Taiwan, actually, on the module side. But I don't think US banks would consider them financeable.
But surely there are Japanese companies, there's Sun Edison,
Right, I'm
Sun
coming
Power.
to that. So there are very bankable companies, on the other hand, but most of them are not pricing at anything close to the levels that the Chinese companies are at. So you have Japanese companies, you have some US companies, you have some European companies. As far as I know, at the moment, pricing for all of these, for this particular band, is in the mid to high 80s. Now, I think you guys are probably, you can tell me better, how that would affect the economics of on the project side. Yes, there may be some residential projects that can absorb that, but on the utility front, I think that would be extremely challenging. So the only exception is a couple of Korean vendors who could meet that requirement in terms of, low enough price and still be pretty considered bankable. But again, only a couple of 100 megawatts is what we're talking about in terms of US supply allocation or capability. There's not too many. So we need to have some kind of reconfiguration of the supply landscape in that event, or a more creative approach that I can't think of.
Great.
If I may, the other thing to point out is that whoever steps in then becomes the target of the next case.
That's right.
And I think it's important to keep that in mind, that there seems to be a sort of a commitment to destabilize the import market for these products.
Right. Okay, so in the interest of time, we have to get through 2 more scenarios here, so I want to move on to those, and then we'll leave at least a couple of minutes for questions at the end here, so get them in your head and then raise your hand when I call on you. So scenario number 2 is the Commerce Department not electing SolarWorld's scope. So maybe you guys can walk me through what that might look like if they said this scope is inconsistent with the scope in the first ruling.
In essence, then, I suppose there's no Chinese product, right, as a technical legal matter?
In this particular case.
In this
there's no
particular
Chinese
case, because the scope as drafted excludes Chinese origin product that was subject or would be subject to the first case, and that first case continues, right? Then it becomes really a case against Taiwan. That's my understanding, yeah. In which case, it's sort of, you have Chinese producers having the ability to source from Taiwan or to source cells elsewhere, and it sort of creates more flexibility, although then you've still got the issue of, just setting up the target for the next case.
Right, and you have the issue of, as Shyam pointed out, so then let's just say that happens and they do impose tariffs on Taiwan. So then the current strategy of Taiwan cell tolling maybe makes a little bit less sense, but as Shyam pointed out, and correct me if I'm wrong, there isn't a next place that's obvious to toll your cells in, right?
And I don't know where the break points are, but you probably know better than I, Shyam, but depending on the level of the tariff imposed on Taiwanese cells, it might make sense for the Chinese producers to continue buying them, and and you're just subject to whatever an X% price hike, basically.
Yeah.
But you have stability in the market.
Right. So my feeling is that if the only thing that happens in addition to the existing tariff is that the Taiwanese cell companies get slapped with a sort of, a slap on the wrist ballpark tariff that's, let's say, 5 to 10%, I think that would be something that could be managed with the existing supply strategy. I think some of that additional cost could be borne on the module side by either the vendor or the buyer, and then some of it could be absorbed by the Taiwanese cell manufacturer, because, look, the US is a pretty big market for these guys. They don't want to start losing significant sales because of this case, so they will be willing to accommodate to some extent. So if that's all that happens from this case, I think you can have a business as usual scenario with slightly higher pricing than previously.
And we haven't discussed it, but the other possibility is actually that the Taiwanese companies that are being investigated earn a zero margin,
Right.
Which is completely within the realm of possibility in a non-market economy case, a market economy case. So
Non-market economy case. Okay, let's move on to the third scenario, which is potentially the most interesting, a negotiated settlement. So this is what there was 7 senators called for this yesterday publicly. This is what SIA has been calling for. This is what happened in Europe in their trade case. Presumably there are negotiations ongoing right now, or at least the beginnings of negotiations being proposed. What might a negotiated settlement look like?
The terms that I've heard are basically a cessation of the current cases, a withdrawal of existing orders, including the order on poly.
This is the Chinese import tariffs on U.S. polysilicon.
Right. A preclusion of future actions, future trade actions. The draft I saw said through, I think it was January 1, 2019. And then where the heart of this is some sort of, what would we call it, wealth transfer mechanism, maybe, to SolarWorld to sweeten the pot for them, and whether that takes the form of something similar to the European-Chinese agreement, or whether it's that type of arrangement plus an outright transfer, which happens in these cases. I'm not sure. I do know that a substantial portion of the U.S. consuming industry opposes any sort of minimum price. And
Right,
so
so
I have a hard time seeing how that part of the proposal goes forward.
That seems to me it's worth spending just a minute on a minimum price, because there was a minimum price in the European case of, what is it?
It was 56 euro cents a watt, which is about 74 US dollar cents a watt. From April onwards, I believe it's now down to 53 euro
Right.
cents a watt, but it's still 73 cents a watt because of exchange rate. Sorry.
Right. So there was, in the one precedent that we have for negotiated settlement, there was a minimum price set. And that seems to be, as I understand it, at least from the outside, the sticking point. SolarWorld is insisting on a minimum price. The U.S. consumers and the Chinese producers are insisting that there is no minimum price. Am I off track on that? That may be that's the thing that is holding this up?
I don't think so.
I'm not going to comment upon the specific sort of possibilities of settlement other than to give you some procedural background, because this is not like the EU case in the sense that we have old cases already in place. In the EU, which has a rich tradition of negotiating settlements, they basically had a big fight, some duties were raised, and then suddenly they had an agreement. The US system does not normally have these sort of agreements. They exist, but I'll tell you there is no existing agreement with China, period, regarding settlement or suspension. The typical, if there were no old cases, it would be through probably a suspension agreement, which would be relatively simple to hammer out. Because we have old cases, it sort of has to go outside the normal context of the Department of Commerce and would likely involve the United States Trade Representative playing an active role and being the key driver in this. But it can be many different ways. In terms of timing, obviously, if parties really want to get something done, things can go fast. Obviously, it also takes a little bit of time for people to hammer out details and for lawyers to draft documents. So I don't think you could say it could happen in a few days. That's clearly not going to happen.
Right.
But if the parties have a will, and if the consumers out there make it very clear that they think that this type of litigation is lowering certainty, it's making their own business prospects gloomy, then I think we could reach a point where the parties do have an incentive to reach a relatively quick settlement.
But we're talking about a matter of months, most likely.
Yeah, we could say optimistically weeks.
Okay.
Very optimistically. I mean, I think the fact that primary term is still a subject of great debate and disagreement, it makes it very difficult. I agree with you, John, that once the parties do sit down, once all of the parties are properly motivated to find the common ground, things can happen very quickly.
And the motivations can come from the marketplace. The motivations can come from a fear of an adverse ruling at the Department of Commerce.
Yes.
It could come from the fear of a decision by the Court of International Trade. So there's a whole bunch of motivators out there. Hopefully they'll converge at the same time.
As we discuss the scope, if there's an indication on scope, the shifting of that issue will change leverage in this case more than any other issue, right? The way that scope gets defined, and a lot of observers think that scope won't get defined until very late in the case, because if it gets defined as it was in the first case, early in this case, it removes SolarWorld's leverage. Or not removes, reduces substantially.
Right. Lots of billable hours between now and the settlement. Okay, I want to leave time for a couple of questions from the audience, if there are any. I see one right here, and I don't know if we have a mic coming to you. Why don't you just shout it out, and I'll repeat it.
Hi, this is a question that goes back to possible solutions in terms of Chinese companies offshoring the two parts of the value chain. And one of the questions that I had, this also goes to Hello? This also goes to, the fact that a continuing case could be brought against that next target country. What would be the impact of a Chinese company using Mexico and leveraging NAFTA to, ship wafers to Mexico, create cells, create modules, and then leverage NAFTA? Is that even a consideration?
Shyam, that seems like a question for you. Is anyone talking about cell and module manufacturing in Mexico?
Oh, there's a lot of module assembly in Mexico. Both there's some domestic facilities. There are facilities owned by some pretty large incumbents. and there are OEM facilities. So module assembly, again, not a problem. Cell capacity, I'm not sure there is any meaningful cell capacity in Mexico. Again, people, it's easy to think that all the three segments of the value chain are similar, but cells are more capital intensive, more expensive. You have to look more at the cost structure, the local factors influencing that cost structure. So to date, there hasn't been a really meaningful cell project in Mexico, and my guess is there must be some good reason for that. We haven't done a really detailed study on that. So again, it's a question of where that offshore capacity would be placed, if it would be. Again, I'm not sure that Mexico is going to be the preferred region for that particular aspect of the value chain.
The second part of that question is, would NAFTA provide any protection against a trade case if there were cell capacity?
Let me just repeat the question here, and this is for the attorneys on the panel. So if you were to manufacture in Mexico, because of NAFTA, would you be immune from being the next location where a trade case was imposed?
No.
No.
No. Another question from the audience. It's a good one. Right here. You got one coming behind your left there.
This is kind of a theoretical question, but as the ITC seems so important right now in gaining traction in emerging markets, is it possible that the outcome of this trade case could potentially inhibit the gaining of traction in those markets and thus, in some ways, almost cause the U.S. solar market to, start to contract on a major level?
When you say emerging markets, do you mean emerging markets within the U.S.?
Within the U.S. New states that are kind of at that ground level, because it always seems that there's that initial gaining of traction where things in a 1 or 2 year period are really slow, and then things just take off, and we're kind of at the tail end of the ITC right now.
So let me broaden that question, because I think what the core question there is, to what extent could this case, or just increasing module prices as a result of this case, impact demand for solar? And I know, Shyam, you've been talking to a bunch of developers and installers about this, and you mentioned it a little bit before, but maybe you can expound upon it a bit. What's the sense you get on how price-sensitive installations are now?
Right. I mean, that is a question. So it's not an easy question to answer, because obviously project economics vary tremendously even for a given segment, right? So the sensitivity to cost increases on the module side varies tremendously. But I think the one thing that it is safe to say is that, at pricing of, let's say, above 80 cents a watt, I think that presents some serious challenges for utility scale project economics in general. The thing is, if you are looking at that kind of cost increase on the module side, then you really have your work cut out for you trying to drive down the cost in other areas, BOS, inverters, and as my good friend MJ Shao has told me many times, the stone has been the blood has been squeezed from that stone over the last couple of years tremendously. So I'm not sure how much leverage there is on that side either. I think that's the first area of concern, the utility scale segment. I think things get much more in the gray area when you're talking about the resi and the commercial side. But the utility scale project, I mean, again, I can give you 2 data points. One module vendor, Chinese module vendor, told me that utility scale projects at pricing of 80 cents a watt that they're offering are quote unquote dead in the water. Another module company, Chinese-based module company, said that their utility scale customers are hitting the pause button on orders because they're not very comfortable taking that tariff risk on. In fact, they're not sure that those projects will even go through at the end of the year. So that says a lot.
Great. I think we have time for one more question. I saw a question up in the front right here.
In all this due diligence and data gathering for this whole process, is there any chance at all they view this as an overreach or even a bullying effort and retract the whole thing?
You mean in regards to the solar world retracting the trade case?
Or losing, maybe, is a better way to say it.
Not for the reasons that you present. Solar world has taken advantage of a U.S. law that exists to protect domestic industries, and has raised a claim that at least is cognizable. My clients disagree with it. I'm sure John's do too, but they have the right under the U.S. law to initiate the investigation. From our perspective, or from my perspective, winning it it's an uphill battle because of the way the U.S. Trade laws are structured. But it can be done, maybe not at the ITC, but at the Commerce Department in terms of driving the margin down to zero, which is why all of the personnel that are on this in the company I represent in Taiwan are busy right now and have been for basically 4 weeks straight, trying to get everything together and amass it and make as strong a presentation to the Department of Commerce as possible.
I think it's easy to say that trade litigation is inherently unpredictable. And if the fundamental question is, can SolarWorld lose this case? Of course they can. Mm-hmm. Anybody could lose it. They have good lawyers. It's a company that's done a lot of good things, but they can lose this case just because of the facts and the law. And on the other side, the Chinese may also face their own obstacles as they go forward. So again, we're still early in the game, and nobody can start waving victory or defeat flags.
Mm-hmm. Yeah, I agree. I certainly I would not encourage anybody to plan business operations on the assumption that the case is going to go away. That's for sure.
Right.